with stock to flow, I kind of looked into it and I was like, okay, this makes zero sense. Now the power law made sense to me because you have a network that's gaining adoption and stabilizing over time.
But you don't think we'll go below 50,000 this?
I personally don't believe we will. 8 years is what the power law says for $1 million. For my projections, it's going to be about 2 years past that.
Hello, Cointelegraph is here live at BTC Prague. My name's Kieran and I'm joined by Bitcoin quantitative analyst Clancy. Clancy, thanks for joining us.
Yeah, thanks for having me. This is great. You can call it the quantile model or percentile model. Both make sense, but really what it is you take the core power law, which is like absolutely the best way to model Bitcoin. I mean, there's different models that have come out, but the power law is the one. Like, I looked into everything. I looked into on-chain. You know, I understand a bit about TA, so I looked into that. But primarily from a modeling standpoint, there's been like stock to flow, you know, with Plan B. My name is Plan C. So with stock to flow, I kind of looked into it. And I was like, okay, this makes zero sense. It was a good attempt. It was a good idea. I think at the time, you know, it gained a lot of popularity last bull run. But I was like, this doesn't make sense because he's basically saying that the price is going, for every time you have a halving, right, you reduce the issuance 50%, it causes a 10x increase from that scarcity, right? And logically, it just doesn't make sense because, you know, having 1% inflation versus like 0.5% inflation, why would that cause a 10x increase in the price? It's just, I mean, Saylor's buying, you know, 4 times that or whatever, you know, per week. So that, to me, the scarcity, like, I understand people wanting to model via scarcity because that is one of the fundamental things about Bitcoin is a 21 million supply. However, the stock to flow is not the way to do it. So I realized that. Now the power law made sense to me, and it's a great foundational way to understand Bitcoin. It's a trend line, so basically you're looking at the log of price versus the log of calendar time. That's the basic power law. And you do what's called an OLS regression, which is a basic regression, and that gives you a trend line through the data. In log-log space, it basically creates a straight line. It logically makes sense because you have a network that's gaining adoption and stabilizing over time. But in essence, the fair value or the trend right now, if people want to know this, because they might, as of right now, or as of the 9th of June, it's 133,000 is the standard power law trend line.
So in simple terms then, for a Bitcoiner, what does that mean?
So that means the trend of the power law, like the fair value trend line, basically the middle of the data set where half the data historically has been below, or half the time we spent below that point, half the time we spent above, that's currently 133,000 for the power law trend line. That's the standard power law version where you use price versus calendar time.
Meaning Bitcoin right now, what is 63, 64,000?
Yeah.
It's half that.
That's for like Giovanni's model, basically. That's the standard power law. For my version, I do a few different things. I use what's called the decay function, which what that means is you're basically accounting for the diminishing returns of the peaks because there is a decay or a decreasing in volatility over time. And that's like not debatable. You can just look at the math. Basically, if someone is contesting that, it's universally kind of accepted. There's various analysts that have all kind of agreed upon this now, that there is a decay. So even if there's a core power law, it doesn't follow a core power law for the full distribution. It's more like the bottom third or the bottom half is following that power law, but above that, it's decaying down towards that. So every cycle, it's kind of diminishing. So when you factor that in and use price versus protocol time, the fair value from my model is 103,000. Now we're still well below that, right? Right now the price is roughly 63, so we're at about the 9th quantile. So what that means is 9% of the time, we've been below this level. And the very bottom, like the very lowest quantile or percentile is 50. So that doesn't mean we can't go lower, but if we were to go to 50K, we would be in a place we only spend 1% of the time historically.
Do you see then right now, I mean, in your opinion, do you think we will go below $50,000?
Below 50,
based
no.
on the other. So I guess the model is one thing, and then when you take into account macro factors.
Exactly, you got to factor in more than just the model. But
you don't think we'll go below 50,000 this?
I personally don't believe we will.
Why do you think that?
So a couple of the reasons. You have the standard 4-year cycle, right? And there's a lot of debate on X about the 4-year cycle. The 4-year cycle, we have followed it pretty well historically. Now it's only a few cycles, so there's really only a few data points there as far as the cycles themselves. But going into 2026, I said, I was posting on X about this, I said, I expect this 4-year cycle narrative to be a major headwind because there's a lot of people that believe in this 4-year cycle. So it's a self-fulfilling psychological phenomenon. And I ran polls on my account and they got like 4,000 or 5,000 votes. And about 50% of people that voted were like, I still believe in the power or the 4-year cycle, I'm gonna sell. So I knew come Q4 of last year, I said, well, there's gonna be a lot of sell pressure. But I expected that to only cause about a 30% drawdown. To be completely honest, that was my kind of thesis. And I said, okay, I think about a 30% drawdown is what I would expect, but I expect a recovery this year from that and a continuation of the cycle. And the reason why that was my thesis is because the peak of 126 was not an extreme blow off top compared to previous cycles. Like 2017, we had a massive parabolic rally, a blow off top and a huge drop. And so there's a difference in the amount of drawdown, and we only got to the I think it was about the 84th quantile or 84th percentile, whereas all previous cycles we got to 99. So I was like, okay, we didn't quite get to the highest quantile. The business cycle, which me and Sminston put out a few articles about this, how we believe this is a better way to kind of model the cycles. Now, the business cycle it's between 0 and 100. There's an index, right? I don't need to go into the details, but essentially, we never got over 50. And 50 is expansion. So every single previous bull run for Bitcoin, we got over 50 and got into expansion, and it coincided with the peaks. Now, that could be a massive coincidence, and it could be. Where like there's no way to fully know. Statistically speaking, there is a correlation there that's meaningful. It doesn't mean it's 1-to-1, obviously, but there is a correlation.
So then, like, because there has been some Bitcoiners that have speculated that below 50 is possible. So in your opinion, then, what would need to happen for those laws to break and for us to potentially go below 50?
Oh, I mean, we absolutely can. I mean, everything is possible. Like the thing about going below 50 for me is you need probably a significant black swan. Which is always possible.
Do you feel the bottom now, like in your eyes?
I mean,
do you feel
it's showing all the same indications, right?
From the sentiment perspective?
So you have, again, the 4-year cycle hangover narrative that's kind of, people are waiting to buy back in Q4 of this year. Because every single previous cycle, once we had the peak, it took about a full year to go through the bear market and then recover. That's just a pattern. It's psychologically, for whatever reason, there's like a full year of capitulation that seems to need to take place. And so that's, a lot of people are waiting for Q4 and to try to get back in. There's really two things that can play out. We have a standard 4-year cycle. We kind of bottom out in Q4 at 50,000. That's what Ben Cowan's, really well-known analyst, a really well-respected. And so far, he's been very right about the way things have played out. I mean, there's no doubt about it. But we'll see if we do bottom out Q4, or if we can recover, from where we are right now and have a bit of a faster recovery. Now, things can play out different. It might not take us as long to get back to the all-time high. And if we do get back in like late this year or early 2027, that would be a different pattern. So there is still room for the 4-year cycle to kind of break at this point. It's not like a foregone conclusion that we're following it again. It's looking and it's trending like we are going that direction. I would give it a higher probability than I did a few months ago. But I still think we could see a recovery faster, and somewhat my thesis of this mid-cycle kind of super cycle where we have a double top, right? And I'm not saying the double top is going to be $1 million. I'm not saying it's going to be 500K. Based on the Quantile model, a reasonable double top target for like next year, if we were to peak, say, end of next year, is somewhere between 250 and 300,000. That would be.
You did just mention the $1 million, and everyone's talking about 2030 for the $1 million. I mean, do you think they're out of their minds, or do you think that's possible?
Based on the power law, Giovanni did a presentation yesterday. I think he predicts $1 million based on the power law, and it's just based on the regression I mentioned. But the power law model is more optimistic than mine, because it has 133 right now as a trend line. So the $1 million is actually 2034 for the power law, and that's because of the trend line. So now you could get there earlier if you were to be above the trend line when it coincides with like a peak. Yeah. So it depends on where you are within the cycle, right? But roughly 8 years is what the power law says for $1 million. For my projections, it's going to be about 2 years past that. So in roughly, I want to say about 10 years. Yes, 10 years. So yeah, it'd be 2036. The first worst case scenario based on my model is about 650,000. Best case scenario is 1.4 million.
So somebody
1.4 million.
today going, that's a 10x of my money in 10 years.
Yeah.
What do you think are the outlying catalysts there which may prove that wrong? You know, quantum, for example, breaking Bitcoin
Yeah.
from 2036, is that what you're saying is one of the, could be a catalyst where it doesn't hit 650?
I'm just looking at, I'm trying to like rack my brain to think of ways that Bitcoin doesn't stay on this like what seems inevitable path of adoption, right? And the math showing what it shows, because essentially that bottom percentile, the model, has been fully stable for the last 10 years. It hasn't deviated. Like the same with the power law. Like these sort of patterns have been very consistent. It's a very high R squared, and everything about it is showing this is the pattern. And this is a representation of the adoption we're seeing. And it's, again, it's that momentum or inertia and the mind virus of Bitcoin that seems to continue to populate out. So just like the internet, like once the internet was going through its adoption curve, it's very hard to slow these things down. So there's nothing I see as far as another crypto replacing Bitcoin. Like I think that's so low probability at this point.
Not even Dogecoin?
No, absolutely nothing. I mean, I just don't see it. There's been tons of opportunity for, if it would have happened, it would have happened already. Last cycle or the cycle before, I could see an argument for something taking over Bitcoin. But at this point, there's just nothing. There's no competition in the proof of work space, and proof of work absolutely makes Bitcoin unique.
Would you say then that at this point, Bitcoin is won?
In my belief, it's already won as far as what it represents, right? As the global digital settlement layer of the future, Bitcoin will continue to get more of the pie, in my opinion, of the overall crypto space, quote unquote crypto, the overall crypto market cap. I think Bitcoin eats more of that pie. I think the Bitcoin dominance will actually continue to grow. So I'm not concerned about something replacing Bitcoin within the ecosystem. It's gonna, in my opinion, for Bitcoin to fail, it have to be something external. It'd have to be, in some insane break of the network, like quantum computing, which I don't understand. Quantum computing, I don't understand. But the experts, the people that claim to understand it, they're not overly concerned about it. And there's so much money invested in Bitcoin at this point with what Saylor's doing. There's such a strong incentive. I mean, he could put $1 billion or a half a billion dollars or whatever he needs to do, 100 million, and upgrade the network. And it's gonna happen.
Right now, obviously your model says that with certainty, and then from the human point of view, that's 650,000 by 2036.
Yeah, for the bottom, that's worst case.
You're 100% positive then on that, 99?
I mean, I would say I'm like 99% confident. Nothing's 100 again, but it's really high. And again, because that's the first percentile, right? Yeah. The fair value has us at $1 million. Yeah. And then the top quantile, best case scenario is 1.4. So between about 600,000 and 1.4. And I feel it's completely realistic. If you look at that market cap wise, it's still lower than gold. Gold's gonna continue to grow and increase as well. So we're chasing something that's growing. But yeah, I mean, for me, these are reasonable targets. Appreciate it, man. Thank you very much for joining us. Thank you. Thanks for having me.